And we're back. For this video, we'll be going over the System 1 checklist. This is also one of my favorite and, of course, most consistently profitable systems that I use for listed stocks. And of course, as always, we have the checklist here. First step of the checklist is check the scanner, type in the stock's ticker. You can't do that without the scanner. So, of course, let's go over that first. Let's move this over here. And right starting at the top, of course, all listed stocks, we have that there. And then the last price, which would be current price, I have it 19 cents is minimum, $1 maximum. Volume shares traded on the day is 3 million. Percent change is 0%. And then we have the custom scanners. And of course, earlier in the course, you learned how to create custom scans, custom indicators to place inside of custom scans. And so we have two here. And I'll open these up so you can see exactly what they look like. I have the 28 on the top, exponential, percent diff is 0, and then have length 1 is 21. And I'm not going to hit save, of course, because I already have it. And then both say exponential. And then let me show you the second custom indicator for the custom scan. I have 83 at the top, I have 0, and 21 exponential. And those are those two. And of course, EXT is checked in 5 minutes for both of these, and then 2000. And I already pressed scan. And so had an example for today, which we'll likely go over. I just want to look real quick. This one is second green day. So if I look at my checklist, previous day, the candle must be red or white. This previous days, this is current day. Previous day is not red or white, so it's not fit. And yesterday's daily candle was green, does not fit. And if you zoom in, yesterday's daily candle was green. But thankfully there was this one yesterday. So go over MRIN. Yesterday's daily candle was red or white, so you got to check there. Head back over to the checklist. The 21 and 28 EMA must be above the 83. And so let's go over here. The 21 is this red one. The 28 is this white one. And so at this time in the morning, I'll drag this down so you can see it better. You can see that the 21 and 28 were definitely above the 83. So we have a check there. And then we'll zoom this back out. So we have 1 check, 2 check, 3 check. Of course, we're going to wait until 9:35 a.m. Eastern. This is a discipline. So if you ever don't get a check for that one, that's all you. All you have to do is not look at the chart until 9:35, because I will not enter on the first 5-minute candle on listed stocks. And so here we get that check because we waited until 9:35 a.m. Eastern. And then if the open price is above middle VWAP, the purple line, then wait to enter right above the open price. If the open price is below middle VWAP, purple line, then wait to enter right above middle VWAP. And for this, for MRIN, I'll slide this over. And so the open price, as you know, or you learned earlier in the course, when you hover over the candle, there's an O right here. That's the open price. The open price is at 51. The purple line, if I highlight it right here, is the middle VWAP. And look, it is above the open price. So in that 9:35, I would be looking to enter right above the middle VWAP, just like the checklist says. Right here. If the open price is below the middle VWAP, then enter right above the middle VWAP. And so I entered right here in the 52, 53 cent area. And then of course, if I'm wrong, because we're not going to be right on every investment, cut the investment for a loss if 5-minute candle closes beneath the 28 EMA. As you can see, got in, and the candle actually used the 21, 28, and 83 EMA as support and continued to push higher and went all the way up to 90 cents. And so we would have a check for everything, and then you would of course always want to get a check for the last one, because this comes down to your execution, which is the most important thing. It's always great to take the correct entry, but you also want to take a very realistic and very disciplined exit as well. And so if we look here, trade price action and look for tops using level 2 or high volume bars on the 5-minute chart. So if we zoom in right here, I got in right here, and it used it as support. And so we have very high volume. This is essentially a double top right here for 10 minutes, wicking off the upper VWAP with very large volume. This is the largest volume bar on the day, as you can see. This blue bar is larger than all of these. Let's zoom out a little bit, so it's a little bit. There we go. And then came down, didn't even touch the middle VWAP to use it as support, continued higher. And then you have another top right here. So this top right here, you would want to, you've already learned how to maximize profit potential, and you've already learned how to scale out. It's essentially the same thing. So example, I bought 50,000 shares right here. And so in this first large volume resistance top, I'm going to take off 25,000 of my shares. It come down, I'm watching. It doesn't even touch the middle VWAP at all on this candle. And then this one, it perfectly bounces off of it, which tells me I'm likely going to get a high of daybreak. High of daybreak means, of course, that this candle is going to break past this one, which what we got. You have a new highest volume bar on the day and a double top. And so that's what I'm paying attention to, and also right on the upper VWAP here. And so I would take off another half of my shares. So the first time I had 50,000 shares here, I sell 25,000 here. I'm not going to sell 25,000 again here, because I'm just going to keep cutting it in half, as you learned in the maximizing and scaling out video. So I would sell 12,500 shares right here. And then it continues to push up. There's a 15-minute top, and it makes a new highest volume bar on the day. And so every time it's making very high volume bars and creating tops, I am looking to take off a percentage, well, a piece of my position, which is 50%, or to make it easy, I just cut it in half. And so right here on this double top again, because it's large volume bar, I sold 6,250 shares. Price continued up again, which was very clear, because I talked about this in an earlier video. The price action is extremely bullish, because only time it dipped down to even the middle VWAP was right here. Every other time it pulled back, the low of the previous candle closed above, the low of the current candle closed above the low of the previous candle. And so that's something that I definitely always pay attention to focus on price action. And so right here, at this point, I only have 6,250 shares left from the 50,000. Comes up, and look, what does it do again? Largest volume bar on the day. Well, yep, this volume bar is larger than this one. It's pretty close. But then what do I have? A double top and wicking off the upper VWAP. So I sell another half. I sell 3,125 of my shares. And now I only have 3,125 shares left. It's the easy part about scaling out, by just cutting your position in half consistently. Now there's a momentum shift and a trend shift here, because this candle closed beneath the low of the previous candle. All of these, since this one right here, this one closed beneath the low of this candle, but all of these, they didn't do that at all. So when it happened again, and then makes green candle, but this green candle has a large wick, so it's selling off. And then when this candle breaks beneath this low, I have a high resistance high and I have a resistance lower high, because this resistance high right here, green red, you learned about that earlier, is beneath this resistance high. This is now a lower high, and when it broke beneath, I just sold the last 31.25, and then now I only have zero shares left. And then that allowed me to completely follow the checklist, as I always do. Well, 9 years of experience, I didn't always follow my rules. Over time, you learn to follow your rules because you learn that's what makes you money consistently. And if you like making money, like myself, you're gonna follow the rules. You're gonna do what you know makes you money. You're gonna remove your pride. You're gonna remove the ego. You're gonna remove the lack of discipline because you like making money. You like making money consistently. You like the way it feels. And that's when the shift occurs. When you ignore anything that will potentially not make you money, anything that you have not statistically tracked, when you throw it out the window, you will watch your account go up significantly. And so at this point, and where I'm at 9 years, I definitely follow the rules. I have the checklist for myself to look at it. And of course, for anyone, whatever stage you're at, you're likely learning this information for the first time ever in your life. And so you definitely want to write the checklist down and actually make checks. And so you can check each of them off. And so that was MRIN. And just like in the system videos, I like to give of course, the checklist, but then I like to go over the ideals. And I don't put the ideals inside of the checklist simply because, again, everyone has different lives. Maybe you missed this entire move. And so if I put an ideal thing, one of the ideal things for me is that when there's a system one, if price gaps above the 83 EMA, that is an ideal setup to me. Essentially, I would rate that as an A setup. A B setup would be if the 83 EMA was above this price, but it still fit everything on the checklist here. And so that's two different setups. And as you know, when you have the same checklist, but you have two different setups, that's where you shift your expectation. And so when I pull up a stock on the scanner and I see that it's gapping above the 83 EMA, I'm going to have the expectation of a move like this type of move. Let's look at, even though these didn't fit, okay, right here. This volume, can't see it. I'll have to drag this over. Okay, this volume was 63 million shares, so they definitely over 3 million shares on that day. Let's put this back a little bit. Definitely over 3 million shares on the day. And look, if we look at the checklist, okay, check. Okay, let's look. Okay, yes, red or white. Okay, check. Okay. And what day is this? This is the day before yesterday, so we have to go over here. It may look small, but I can see it. The 21 and 28 is definitely above the 83. And so we would get a check there. Yeah, it actually looks pretty small. And then we get the check there. And of course, as always, this is on you. If you can't be disciplined to sit here at 9:30 and not pull the trigger until at least 9:35 a.m., don't show up at 9:30. Show up at 9:35. Well, show up at 9:34 a.m. and then start typing things into the scanner. And then so you get the check there. And then for this one here, the middle VWAP, I'm gonna have to drag this so we can see it better. So the 21 and 28 didn't get above the 83 until over in this area. And the open price is right here. And so the middle VWAP is above the open price. So of course, go back to the checklist. We have a check for these four. Same thing, the middle VWAP the open price is below the middle VWAP for this example as well. And so middle VWAP is right here. Once the 21 and 28 were above the 83, middle VWAP is right here. Open price is at 13 cents. And so execution was at like 13.4, 13.5, 13.6 area. And as you can see, I have less expectation of a extremely large move. And guess what? This one exceeded the expectation, which is always nice. You have the expectation, so you remove any type of greed. That's what the expectation is for. It's for greed removal. Because in the beginning, many years ago, there's too many times that I was up significant amount of money, but because I was having a MRIN expectation on a TPET, that's where I was costing myself a lot of money. Because let's say this one followed the expectation, because this one is underneath the 83 EMA on the daily chart. And let's just say normally when this wicks off, rejects the 83 EMA, this will just sell off. It won't gap up the next day and continue higher. Clearly, this company is doing something correct, and that's one of the main things that why I love investing in the stock market and stock companies, because these are companies and they're low price companies, and so they're constantly thriving and striving to achieve better and greater for their company. And so normally this will just reject on this day, and this will not gap up. This will actually just probably gap down and then sell off. And so I would be looking for an MRIN type move, and I wouldn't get it because that was the incorrect expectation to have. Now it's wonderful when the price exceeds your expectation or shifts your expectation that you tracked with statistical data, but that's where price trading, price action comes in. And so you'll be able to maximize your profit potential because you are trading price action. You're not just having the expectation of what you expect the move to do and then ignoring price action, because clearly this price action is saying that it's going to continue higher. Excuse me. I'll show you exactly what I mean. Entry was here, didn't create a large volume double top until right here. So 50% or half my position would get taken out there. It perfectly used the moving averages as support this entire time. And then when it came up, and you can see there's no volume. So when there's no volume like this compared to this volume bar right here, I'm basically just waiting. I'm relaxing. Comes up, massive volume. It doesn't double top and it doesn't reject off the upper VWAP. Like here, it rejected off the upper VWAP, and then this isn't a double top either, but it was straight push and then dump, and it's on very high volume. And so it's not essentially a double top because these two candles aren't at the same exact price, but this candle and this candle is at the same exact price, and that's why I classified it as a double top. This right here, these two are not a double top. Zoom in for you. It's high volume, but not a double top. But right here, this is a lower high to this one, and these are a double top, still on higher volume. And so that's where I was like, okay, take off another piece. And so 50% off here, 50% off here, and 100,000 shares in initially would sell 50,000 here, and then I would sell 25,000 here. Comes up, and again, I'm paying attention to the low of the current candle closing in relation to the closing. And so this low right here closed above the previous candle's low. This candle closed above the previous candle's low. And when I'm following that, that's it's the easiest way I found personally to just really maximize the setup. Because look, this entire time, not one candle closed beneath. There is no reason for me to even consider taking off a piece of my position. Like none at all. I mean, they did have high volume and it did double top right here. So if you took off another half, guess what? You're not out of the entire move with your entire position, so you're still able to ride the wave. Removes FOMO, it removes greed, and you feel like you're still taking a part. And the best part about it is you're locking in money along the way. And so you're locking in those gains, because this could go from 15 cents to $1, and you could be up a whole lot of money. But if you don't lock any in and it comes all the way back to 15 cents, you accomplish nothing. You just wasted time, energy, and effort. And so that's why you scale out and lock in along the way. And then look right here. Here's the shift. This candle's low is beneath this one. It didn't close beneath it, but it is beneath it. So this right here is like, okay, there might be a shift right here. This candle definitely says, okay, there's definitely a shift. And so massive volume bar, wicking off the upper VWAP, and this is mostly selling pressure. You see how this is all body and it's green? That means it was majority buying. This is mostly wick. Is barely any body. This is mostly selling, rejecting off, very high volume, indication of a top. Clear indication of a top. And so I took off another half of the position there. And then once this closed beneath here, that's when I'm like, okay, this is probably done. I mean, at this point, I was already up like almost 80%. So when this closed underneath this low, okay, I'll dump the rest and call that a trade. And again, I could have done better because my expectation was, okay, this one's beneath the 83 EMA, so I'm not expecting something like this, like a much stronger push, where this pumped over 100% straight there. But that gives the idealness. And then right here, you could see this volume's extremely low, so that likely wouldn't have fit at all. And then this first green day, this one was beneath the 83 as far as opening goes, so I would have had the similar expectation. And then it pushed up and sold off. But yeah, simple checklist, simple to execute. Another one that was above, again, this is completely fits the checklist. There's a live video in the course for this one here on how I executed on March 15th. Beautiful setup. And again, I had the same MRIN expectation. Well, really on MRIN, I had a verb expectation because this one happened before MRIN. And got the push. It started above the 83, fit the checklist, paid out very nicely. Very, very nicely. But that is system one, and I have given you the ideals. If it gaps above the 83, I expect it to do much more percentage very quickly than opposed to the fitting the checklist for system one and it starting beneath the 83 MA. Catch you in the next one. And if you have questions, of course, you know where to find me.